Good evening, folks. So back with another video. Just going to kind of talk through my trades today. I should say trade because I only did trade once today. However, I did close my long trade, which is the trade you can see on the screen, and I did close that position today, and that was from Friday. So just kind of going to talk through my thought process regarding this trade, why I closed, the discussions I had today which made me come to that decision, good habits, income, trailing stops and things like that. And then I will break down my long trade that I took today, which was a winning trade. So just start off with this trade. Where my take profit is here, this is basically where I close my position. So I closed my position for a profit of 1.47%. And my initial trade was for about 2% in and around here. And the reason my take profit was there was just basically because we have a daily resistance. We've obviously got a monthly support level, and we've had some reaction in there. So on the way up, I thought that was a good area to have the take profit. So that is where I had that. But I did decide to close here. And the reason being is because, from a technical standpoint, just looking at the charts, what does the chart tell us? So initially where I got involved in my buys today was in and around this region. And the whole idea was based on mirroring this move here and this move. As you can see, when price comes into this area, we seem to have a clean move. Right, we seem to mirror what's left. We seem to have a nice move, and if we sort of combine that with volume, then it makes it even easier. Okay, and that's what happened today. We got a nice volume push on London Open, pre-London as well, 7:30 leading into London Open, and we had the largest candle of the session on the 8 o'clock candle. But we sort of completed that move, and as you can see, this candle had tapped into the support zone, which is basically from this this support area here. And the reason I have this blocked across is because we have a reaction here. So as we come up, we tapped into that. So now that move is complete, I was sort of thinking to myself, well, if my target's here, which is kind of like 2%, I've got 1.5 locked in. What I was actually doing was I was actually trailing my stops. Kind of like like I was saying yesterday, we had a good discussion on Friday about trailing stops and things, and initially my stops were here. And then what I done was this morning when I came to the chart after this 4-hour candle, I just trailed my stops up to below this candle, which was yesterday's. And on the 1-hour chart, that's how that would have looked. It would have been in and around here. So, price is moving up in the market, and it's just as we sort of break highs and continue, I'm just sort of trailing my stop that way. Now, at the time I had my stops there, and price was up and around this region. And the discussion I had today with a few people, I'm a mentor and a few other guys within the community, was about where's the best place to trail stops? Is it a good idea? What makes sense? Good habits, income. And the thing that was sort of, clear was we've sort of replicated this move. So we've tapped into this zone. So if what price can do then is, we don't know where price is going to form higher support. It might come down this way. It might come down to here. It might come down the whole way down to here. And the whole talk was like, are you happy with what you've got? Are you happy with what price is giving you? From an income perspective, the sort of big thing was, well, if I'm trading a large account, say for example I'm, this trade's worth 10k, 5k, £500, whatever it may be, anytime price pulls back, I'm losing income, right? So if I've already, done a very good trade, done great analysis, had a very good trade up until this point. So price pulling back, I'm losing income. am I happy to lose that? If I was trading such a large account, large risk, would I actually allow price to come back? Now, one thing I was thinking to myself, well, like I've already let price come up to here and come back as far as here. So I was like, well, what if the same thing happens again? You know, am I happy to do that? And it just sort of clicked with me in a sense where, like, I need to start building a good habit. You know, I do have a good habit of being in and out, you know, locking in 0.5% or whatever it may be. And I'll kind of touch on that today because that's exactly what I done, and price continued to rocket. But if I'm obviously want to be trading large account in the future, larger capital, you know, these higher time frame trades, there's no real reason for me to be in them, right? Because am I realistically going to hold a trade for a number of days and take 100 pip swings in drawdown profit when I'm risking such a large amount? You know, the likelihood is I'm not going to be. So if I'm sort of maybe not going against, but if I'm doing something differently to what I'm doing intraday, you know, you can kind of see how that can play with your emotions and how that could maybe lead into your intraday trades wanting to hold them longer, or kind of going against your plan or what your data tells you. So on that basis, I just made the decision to close. I was happy with what I had. Trade was going for 2%. I kind of locked in almost 1.5. So at 1.5 gained for 5 lost. And if this had have pulled back, I could have lost a lot more. So I was just happy to get out of that. And another thing was, well, look, if my analysis plays out, it's not even better, but that's brilliant. You know, it shows that what I was doing on the charts, what I was analyzing was correct. And if price decides to come back, push up, come back, you know, I can still capitalize on the overall analysis just on increments and moves within the bigger move. You know, I don't need to literally be in a position to hold it. And if I'm going to be trading for an income, and if I'm going to be taking an income from the market, I want to be in and out. I want to take my profits, and I don't want to give anything back to the market. If it goes 100 pips, 200 pips further, you know, that's fine. But it's sort of just building that habit. And, you know, it was like closing this out, it didn't bother me, you know, because I sort of, you know, said to myself, like, I've done a good job. And I was happy with what I got, you know, and if the analysis plays out, fine. If it doesn't, I've been able to take some from the market. And these sort of higher time frame plays, I'm only sort of giving myself maybe one or two of these a week, and it's sort of to see how if I can get into a profitable position for the week, or like a longer term play, and sort of like a swing trade in a sense. But it kind of does counteract with what I'm doing intraday. But at the same time, I would say one of my biggest I don't know what's the word I'm looking for. What I'm quite good at is sort of analysis, higher time frame analysis. You know, I would say my 30-minute, 1 hour, 4 hour daily, weekly is a lot better, and I'm a lot more comfortable, a lot more confident in trading that over trading 5 minutes, 15 minutes, 1 minute, so, you know, lower time frame stuff. So my higher time frame analysis is actually quite good. Okay, so it's easy for me to sort of break charts down, identify areas where I would like to get in at, cleaner moves and things like that. So when I seen something like this set up, it made complete sense to buy this. Now, what's to say that we get there in 2 days, 3 days? You know, we could have stalled, come back, and took maybe 2 weeks to get there. Who knows? But from a structure perspective, we pull back into a previous level of resistance, now support, and we continue. You know, it's kind of as simple as that when you're looking at candlesticks. But I just kind of wanted to touch on that because it's kind of like an interesting topic when it comes to decision making and your plan, and, yes, my original plan was to, you know, have my take profit up here. However, I was happy with what I want, what the market gave me, and at that time I didn't want to give anything back to the market, you know. So that was my decision to close that. But yeah, very good discussion today about income, and when you're actually trading from income, you're not really going to have such big swings like that. In terms of, you know, drawdown of larger capital and things like that, because at the end of the day, you know, your job is to take an income from the market. So that is that. So that's that trade, and that closed out for 1.4, which 1.47, which is great. So kind of just to touch on today's trade. Let me just take off this long position and bring on today's trade. So what I'm going to do is I'm just going to go to the 4 hour, and I'm just going to bring this back to here. Okay, so this is when I came to the chart. Let me actually just remove my today's trade here. Let me see, where are we? Okay, we're here. Right, so this was when I came to the chart. This is what I seen. Okay, and what makes more sense, you know, we have a bullish candle which closed above resistance, and we have a second 4 hour candle which forms resistance. This is obviously reacting based off of this. This is obviously reacting based off of this, and this is reacting because of this. So when I'm looking left and I'm like, well, I have a mixed bias. We're actually going up in the market. Higher time frame, overall bullish in the market. I only want to be buying. I don't really fancy sell. Okay. Even though we have a mixed bias, kind of similar to last week, there was opportunities to do so, but I just prefer to wait for the buying opportunity. And if I just take this away here, because this 4 hour candle had rejected and reacted off of this support, and we have sort of like a, you know, you could say between this resistance and this support is basically our zone, and within that zone we have a sort of, you could say, like a mid-range or just a resistance. Okay, now looking left, kind of this high aligns really well with that resistance. It just reacted right below it and closed back in the zone. So one thing I was looking at was, well, if I want to be buying, where do I want to be buying from? For me, I want to be buying above the high of the previous 4 hour, which is also above, well, it's below, but I want to be trading above 165.883. Okay, because I'm thinking about zones, right? So my idea is we're trading, we're sort of in this support zone. If we can push above this, there's a good chance that we will tap into the opposite end of the zone, which is this 4 hour resistance. And what I was looking at was, well, every time we've come into here on the way up, what have we done? We've tapped into the top of the zone. When we've come into it, next candle, tapped into the opposite end of the range. So my thinking was, well, if we can get above here, time it with volume on the open potentially. If we can get a push, can we tap into the opposite end of the range? Now, one thing I was also looking at was, well, what if we break this? Because we have clean candle here, clean candle here. So my actual idea was, what I wanted to do was see if I can, because I know that this is the cleaner area. So I could say to myself, well, do you know what? I'm going to wait till I get above here. And what I'm going to do is I'm going to trade this, right? However, what I was actually paying attention to, and which was, well, where did this move here and this move here, where did this move start from? Well, this move started from here, and this move ended here. I'm Obviously I'm trying to look to mirror these candles, but specifically this one, because we're on the way up, right? We're bullish in the market at the time of coming to here, and at the moment, what are we doing in the market? We're pushing up. Okay, so what I was thinking to myself was, well, where does this move start? Right, well, this move starts here. So what's the chances that I can sort of replicate something like this here? If price can push volume, we break here, I get into a position, excuse me, see what happens at this level, and if we break, can I get this move to here? So that was my original thought process, and this is just based off of the 4-hour time frame. Like, I haven't looked at any other time frame. I haven't looked at the 1 hour, the 30-minute, the 15-minute Asian hand low. I haven't looked at any of that. This is just solely visually based off the 4-hour, right? You know, I understand there's wicks here, there's wicks here, there's wicks here, right? But when volume is in the market and momentum, I know that it just doesn't respect levels. It smashes through them, right? So I'm trying to see if I can get into a move when volume's approaching, and you know, ride the price movement through that. And let me just go to the 1 hour a sec just to have a look at that. So that's how the 1 hour is, and if I go to the 30-minute, that is how the 30-minute is. So essentially, Asian high and low, which is the most recent support and resistance pre the session, is actually here. That's a resistance, and that is the support, right? So see to me, this is just jargon. Like, I don't really like this price action, right? This is quite choppy. We're moving up. We've got wicks in either direction. So if I just bring on my tools here, my tools, this is what I'm looking at. So I have marked out, yes, Asian highs here, right? But I've already identified from the 4-hour where I believe the most efficient move is, or where I believe we'll get the easier move above. It's above the high. So I kind of just marked out this 30-minute resistance zone and this 30-minute support zone. And you know, you could draw this to here, you could draw this to here, to here. I just done it to the support candle because that's a candle that formed a support. And see, to be honest, I'm not even interested in selling. So say if price comes down here, I don't really care what this zone is. I don't even need to have this zone. But visually, I'm just looking at this, right? This is the most recent kind of like boxed off zone. I want to be above that, okay? So that is my zone that I have on the 30-minute time frame. Looking at that on the 30-minute or on the 1 hour, that's how we're looking. You know, you might say we have a 1 hour resistance in here. Yes, we've got rejection off that. What about this 1 hour support? What about the levels in here? Like, I'm not worrying about that. You know, I'm looking for targets, not problems. I'm looking at my 4 hour. I've mapped out my cleaner moves on the 4 hour. If I get volume and we break these levels, there's clean traffic to the left. Why can't we mirror that move? So if I kind of just skip, this is how the 30-minute closed at 7:30. Or sorry, apologies, 7 to 8. So this is the 1 hour leading into London Open. If I go to the 30-minute, that is how that 30-minute closed. Okay. Looking at the 15-minute, we can see here, and this sort of zone I marked out here. This was a zone my mentor Chris had marked out, and says if he sees candle leaving these zones, he's going to get involved in a trade. And I marked this out because I just wanted to see what sort of reaction we would get here. And looking at that on the 15-minute, that's like textbook, right? Now, I'd already marked up my cleaner area where I wanted to get involved in, okay? And this is kind of similar to yesterday in terms of we pulled down pre-London, we pulled deeper than Asian low, we formed our support, and then we pushed to the upside. It offered an opportunity to get into a trade. I had already marked out my area based on the 4 hours to where I wanted to get involved. So when this was playing out, I just wasn't really comfortable taking it. The reasons for that is what my thought process was our bias is mixed. We have broken the most recent support on the 30. So what I'm thinking is, well, what if this is just going to pull back into this zone, form potential lower resistance to maybe do that, right? So I didn't really like that. Was one thing, right? The second thing was just that this just to me isn't clean, right? It's not nice. I'd already marked up where I believe easier buys come from, and if I was to get into this trade and lose, right, I would probably reflect on this and I would say to myself, well, I never put myself in the best position in the market. You know, and when I think about, do I need to trade every day? No, right? Is this a potential trade where you could have actually just missed this trade, or not missed this trade, but just not got involved because you didn't like what you seen? Absolutely, right? So, but the only thing is this is a good trade, because what you're doing is before I'm even getting into my trade, this trade's already complete. You know, if we're looking at like triangles, this is a resistance, we break down, form a support, push up, test the top, trade's done and dusted, right? So from an efficiency point of view, this was an easy move. This was the trade, breaking that high, because that is pull back in, changing structure. You could even go in the 15-minute, but again, I would say I'm probably I'm not the best 15-minute trader. I don't take many trades on the 15-minute. Mines tend to come from 30-minute or sort of just, 1 hours, and maybe my sort of 15-minute trades would come where a 30-minute would close, so the second half of 30-minute, or maybe building confidence on time frames. That's my sort of style with the 15. But if I just go back and bring on my trade, I'll kind of sort of talk through. I know this video's been going on for 22 minutes, but I could talk about this stuff all day. But this is my trade here, and this trade was based on the 4 hour, right? If I just go to the 4 hour, that is how the 4 hour was looking. So my entry, it was a little late. It was 4 or 5 pips late than being above the high, being above this resistance. And that was just my fault in selecting open trade. I didn't have a buy stop on this. My stop loss, you might be thinking, why is your stop loss there? Your stop loss based on the 1 hour and based on the 30-minute. My stop loss is in no man's land. My trade's based on the 4 hour, and I have my stop loss below this zone, because my thought process is, if we're leaving this zone, we're going to at least tap into the opposite end of the range, and then if it's in a volume momentum, I don't see us coming back here. Okay, and so that's my stop loss. The trade's based on the 4 hour, taking off the 4 hour, stop loss based on that. Essentially, you could say, below the candle or whatnot, but I don't believe we're going to come back to this zone if volume's in the market. This 30-minute candle is a clear indication that volume is in the market. This candle is a 35 pip candle. We close above resistance. We close above hourly resistance. That it is a good looking candle. Like, what would you say is likely to happen next after that candle? You would expect some form of upside based on the size of that. We're leading in the London Open. Volume again on the open. Continuation. So what actually happened then is, boom, we got a big spike up, and this candle here was the largest candle of the session. I think it was a 50 pip candle. Yesterday's session, the 8 o'clock candle, was 64 pips. I think it was the largest candle of the session as well. So I know that those candles on the open are the ones that are given the push, really, or the bigger move, or the larger piece of that move. Now, what I actually done was, as you can see here, I've got a red line that says move to 0.5. So obviously based on my data, this is where I sort of like have a bit of a conflict with myself, and it's like my data tells me I have like an 86-87% win rate of achieving 0.5. I think my win rate for let me just have a wee look here. Yeah, so my win rate for 1 to 1, 71%. My win rate for 0.5 is actually 86%, which is quite good. So based on my data, as price was up here, which was like 0.7, what I done was I just moved my stop loss to 0.5 just to lock that in, right? What happened was price then pulled back, topped me out, and then continued. And as you can see, we were able to complete this move. So that would have been a 2% win. I only achieved 0.5 out of it. I wasn't actually really annoyed at this at all today. You know, I didn't even dwell on this, which typically I would. You know, previously I would have been like, oh, I should have maximized the full move, blah blah blah, tough locks and all this shit. But you know, this is like when I'm thinking long term, you know, I'm thinking over a month. If I'm sort of taking the exact same trades I'm taking today, there's going to be times where I'm going to get 0.5 like today. There's going to be times where volume will just keep going, right? And I'll be able to lock in, move my stop up and just squeeze it as much as I can, right? If I know my bar minimum is 0.5 and I achieve that a lot of the time, but there's going to be occasions where I'm able to capitalize on a bigger move, you know, that's absolutely fine, because, you know, essentially over a month, you know, I only need a couple of trades, and unfortunately this one I wasn't able to capture the full move because and the thing was, is like I sort of planned this, right? But obviously when you lock in a percentage or a piece of your move, you're sort of, there's the risk there that price will come back and hit you out. You know, there's no reason to say the price is going to continue. Price may not, but yeah. So I locked in 0.5%, topped me out, and then continued to, you know, complete the triangle, or not the triangle. Sorry, the trade idea. And one thing I overlooked or didn't pay much attention to today was where is it? Do I have it drawn on here? No, was just what yesterday done in terms of the largest candle of the day. Because see, when I closed my trade or I came out of my trade, I was only like 11 minutes into the 8 o'clock open. So I'm only 11 minutes in to the 30-minute candle. You know, I know that the 30-minute candle, based on yesterday and a lot of time when we have London open, is you're going to get the largest candle. But if I just go based on yesterday, right, I know that I'm going to get, or it's likely that this candle is going to give me a good push, because with clean traffic left, it occurred yesterday, and when I get out of the position, I was only like 16 pips up, right? So you know, there's a lot more room within that candle. So no, based on that, you know, I could have potentially been a little bit more cautious, and maybe not so. I don't think cautious is the right word, but maybe like I'm, as much as I'm what I'm trying to do here, you know, I'm just like clicking on to what I'm trying to do is, it seems to me that I'm trying to justify this, right? Or I'm trying to say, well, I should have done this or should have done that. But see, that the bottom line is my data tells me X. If I continue to do X, I'm going to be profitable. If I continue to do X, I'm going to be a profitable, consistent trader, right? That's a bottom line, you know. So it is what it is. Happy enough. I actually closed out today then with what, 2.1% almost, which for this month has me sitting at let me just put that in 1.4. So that has me 1.47. That has me sitting at I can't even count. Jesus. 4.85 plus 1.4. So roughly around 6.2, 6.3% for the month, which is good. Haven't had no losing trades this month, which is brilliant. But yes, I know this was a long-winded video, but you know, this is just all raw. You know, it's just, I'm just talking in the moment, my emotions, what I'm feeling, you know, my ideas, and you know, making a couple of notes that I've made during the day based on what I was feeling in the moment and how things are going and different things. It's all just raw, like, but appreciate you if you take the time to watch this. But yeah, that's a 30-minute discussion of my higher time frame long trade, which I closed out today, and of course my intraday trade, you know, at London today. So thanks very much, and enjoy the rest of your evening.